And there's the little recording lady. So I guess we're off to the races here. Good morning, everyone. Welcome to Tax Implications and Strategies for Small Business. We figured this would be a good month to talk about taxes since, man, I'll tell you what, it's coming fast, isn't it? I mean, it's right around the corner, tax time. So the earlier we get a jump on it, the better we are. Plus, we're probably finalizing our financials from 2021 now, either through QuickBooks or whatever we use for tracking. So we thought we'd bring up some strategies and ideas about the various legal structures and what the benefits and the pros and cons are of those particular legal structures. We're for the Shasta-Cascade Small Business Development Center, otherwise known as the SBDC, and we're a nonprofit organization and provide confidential no-cost advisory and training. So welcome. We are funded by our tax dollars. So guess what? We don't charge you anything. We're already being prepaid, aren't we? Every time we pay our taxes, we help keep this small business advisory group alive. So we're funded by the SBA and the California Governor's Office of Small Business and Economic Development. We call it GoBiz. And we have also some private investors as well that donate to our cause to help small businesses. We have a large group of people to help and assist. This is a small sampling of our local group up here in Redding. We are coming to you live from Shasta, Trinity County. So those of you who are coming into the webinar from outside the area, there are SBDCs everywhere, okay? We cover the entire United States. Every county, every city in the US has a designated SBDC office with people like David and myself and the rest of the crew here to help. We've got marketing people, HR people. We've got QuickBooks trained specialists. She is a QuickBooks certified trainer. We've got people to help and assist with pitches. If you want to do a pitch deck to an investment group or a person that wants to invest in your new business, we got a lot of stuff. We got a lot of stuff. And we have access to a bunch of other consultants, including restaurant specialists and people to help with Kickstarter, GoFundMe programs. We got people that you can hook up with all through our program system at no cost. And here's our attorney disclaimer. So you'll be getting a copy of this slide. So you're going to have the whole slide deck in your hands here sometime along the way. You signed up with your email address, we'll send it to you. But basically what this says is that we are not lawyers and attorneys. We are not CPAs, okay? We are not actually certified financial advisors, okay? But as you'll see on the next slide, David and I have you can tell we been around the block a couple times. We have a multitude of information and ideas and experience that we'll share with you. And then we always say with the caveat to please check with your attorney and or CPA before you move forward in these areas, okay? And there's me, my old bald head. I'm Joe Rodola, lead advisor here at Shasta-Cascade. I'm a credit guy, okay? I've been in the credit field my whole life, one way or another. 25 years in the banking industry, 11 years as a small business owner. I actually also managed a small nonprofit, CCCS, for 13 years, consumer credit. I like to say I help people get into debt for 25 and the next 13 help them get out. So that was my penance years, I call them. In the last 9 years, I've of course been helping small businesses in one way or another. So love helping as much as I can. So the agenda, we're going to talk about new business startups, tax planning, and business expansion, and the effects of various tax options based on these events. So let's start with new business startups. The reason we bring this up is because you have to make a major decision, and that is, how are you going to set the business up? So what we're talking about here is Are you going to run it like Joe does, myself? I'm everything from the janitor to the CEO of my business, okay? I operate out of the second bedroom, half of the second bedroom of my house, where my wife operates her business out of the other half, all right? That's our head office, the second bedroom of our home. So we run sole proprietorships, okay? Me, myself, and I, there's our 3 employees, right? It's just us. So she runs her real estate business. I run my debt consulting business. So we run sole proprietorships. But, you know, as you move up the ladder, as you grow, it may be important that you think about other ways to structure that business, whether it's an LLC, limited liability company, or a corporation even, okay? And there are steps you can take along the way. So we'll cover that. Select which way you're going to track your income and expenses. Always be ready to plan. Plan, okay? At least minimally every month, you should be checking to see how things are going with your plan. Whether it's a written plan or you have jotted notes on a dry erase board or whatever you use, okay? And of course, watch the money. Watch the money, right? Because it's going to cost you one way or another. It's better to know immediately when things are either better or worse. Either way is important to know. Because I'll tell you what, besides having it, you know, your sales tank or go down, which is scary, it's even as much scary if your sales are rapidly rising. Who's going to do the work, right? So there's all sorts of possibilities in this area. So choose the right one. So we're talking about sole proprietorships. Again, that's kind of a one-person operation, okay? Partnership, you and your buddy going to open up a business. You may be 50-50 owners. You may be 60-40. Depends on how you want to operate. Normally a partnership agreement is made, okay? Pointing out who's going to do what. Any of you ever watched the Big Bang series? They had these agreements, right? Renters agreements and so forth that Sheldon always had involved. Well, this is required on partnerships. Very good idea. Handshake doesn't always work, right? So all of a sudden somebody's doing all the work, the other one's not doing anything. So better to have an agreement. LLC, limited liability, okay? I call that a mini corporation. It's normally the next viable step. And then there's S&C corporations, okay? And that's when you get kind of into maybe having subsidiaries, have as much protection personally as you possibly can get. That's what the corporations do. So pros and cons of a sole proprietor, okay? Person who is exclusive owner of the business, entitled to keep all after-tax profits. And that's what happens to me. Anything left over, Joe gets, right? After paying expenses. Simplest form, prepare and file tax returns on the 1040 using a Schedule C. One of the issues we found recently in the last 2 years during COVID is that a lot of small business owners did not know what a Schedule C was, okay? It's basically converting your profit and loss statement into a tax readable IRS form on your taxes, okay? It's how you pay taxes on your business, as a matter of fact. You don't have to register with anybody. It's just real easy to open, especially if you open it under your surname. You don't have to go through another hoop. You can hire employees, you can hire contractors, and obviously it's one of the lowest operating costs because normally, like in my case, you have very little overhead. I don't have a storefront. I don't have extra lights. I just pay my rent for the house anyway, my lights for the house anyway. There are ways in accounting that you can write off some of your rent and or house payment. We always say check with your CPA accountant, the bookkeeper, to follow those steps. It's based on the size of the square footage of your office space or bedroom compared to the size of your building, the size of your house. And you can take a percentage of that off of your income tax, but there are ways to do that specifically. Cons, we're liable for anything that happens. So if we're sued, then Joe, in my case, is sued. So personal liability is there. It's unlimited, okay? Higher total tax liability versus LLC and S Corp. One of the main reasons on a sole proprietorship that I found early on, my wife's been doing it for 25 years, so we knew it with her immediately. It's not the IRS tax debt that you have to really watch. It's the self-employment tax. Self-employment tax is technically your Social Security payment. And I'll tell you, based on our past histories, as we've been sole proprietors, we have seen that the higher dollar amount that we owe at the end of the year is based on self-employment tax, not the IRS. It can be to the point where I'm paying the IRS $1,000 in tax for the year and another $3,000 in self-employment tax for a total of $4,000. But remember, eventually you're going to get part of that back depending upon whether you apply for Social Security down the road and how long you live, right? So that'll depend upon how many checks you get. And of course, limited on certain tax deductions based on the fact that you're a sole proprietor. Partnership, normally 2 or more owners, should be governed by a partnership agreement, as mentioned. Must prepare and file a Form 1065, must prepare California State Form 565. Again, if you're utilizing a tax program, you know, a TurboTax, something like that, and you're trying to prepare your own taxes, these documents and forms are included in that as you go through. If you have an accountant, bookkeeper, you know, a tax person, they of course will help you file these as well. And limited partnerships must pay a minimum franchise tax of $800. So there are certain things about a partnership that you have to keep in mind. One of the most important being that agreement. LLC. You can have single member and multi-member, okay? You can apply now through the state of California's website. You feel real confident about the paperwork, you feel real confident about crossing T's, dotting I's, you can do it, okay? You can have a sole proprietorship with a limited liability, must prepare this California LLC return, it's called a Form 568. And there's a minimum franchise tax fee to the state of California every year of $800, even if you don't make $1. So there's fees involved with the old LLC. Multi-member, they have more than one owner, right? And there's a Form 1065, California State LLC return Form 568, must pay annual tax the same, $800. If you have an LLC, state of California, $800 minimum fee per year, period. It's the way it is, okay? So it's something to think about cost-wise, but it does protect you personally a little better than a partnership and sole proprietorship because the LLC is a separate entity, right? It's going to have its own tax ID number. It'll be actually a separate entity. Your bank accounts will have LLC on it for the business, okay? And just an easier way to protect yourself personally, okay? Pros and cons of the LLC: less tax potential, limited liability, which we just talked about, separate tax return, higher insurance costs, and that $800 fee. A lot of times when you start out, the $800 fee is kind of a grabber, right? You don't have a lot of money to begin with. So you have to pay $800 out of your yearly cash flow. That could be meaningful. It could be meaningful. But again, when I normally say, or we normally say to people that are coming in, want to know about the LLC, if you have rentals, if you have RVs, big RVs, boats, you have a lot of assets, personal assets, and you may want to consider it because there's, you know, the attorneys and people are, unfortunately, something happens, they're going to want to sue you, helps protect them from coming and taking all your stuff, okay? Corporations, you got subchapter S. These are some of the positives: limited liability, less than 100 shareholders. Income losses, deductions, credit flows through the shareholders, okay? Must have a separate bank account, obviously. We suggest that for anything, doesn't matter what. Even a sole proprietor should have a separate bank account for the business, okay? That way you can funnel all the income through that bank account and then pay yourself out of there to your personal account. You have tracking, don't you? See? So always have a separate bank account. Here's the documents that have to be performed. And again, normally when you're a corporation, have somebody do it with you, right? Accountant, CPA, bookkeeper. You got to have somebody assist in putting that paperwork together that knows what they're doing, okay? Pros and cons of an S Corp: potential less tax, okay? Limited liability again on a corporation. Again, separating you personally from your business a little better. Separate tax returns, of course, likely higher insurance costs, shareholder limitations, minimum fee. So those are the pros and cons of the S Corp. C Corp, a little bit different. Limited liability, must meet multiple requirements. There's the forms again, there's the fees. Again, when you're deciding on a corporation, two things I think to keep in mind. Have an accountant, CPA, somebody assist, period. Okay. And probably in most cases, hopefully you have an aunt, uncle, father-in-law, right? Father. They might be an attorney or have a lot of legal experience to help you with the process. Talk about T cross I dot, man, you got a lot of the paperwork to do, okay? If you have an attorney assist, obviously you're going to be looking at about, give you an idea of the differences, about $1,500 to $2,000, maybe more, to set up a corporation. LLC, if you use a service and not try to do it all yourself, you'll probably pay through like LegalZoom, $250, $300 for the state of California. If you try to do an LLC yourself, you got at least the minimum $75 filing fee with the state, okay? Plus documents necessary, okay? And then again, sole prop, it's very simple, very little paperwork, okay? Tax planning. You've got options. You've got options. In another one of our classes, we talk about using Excel spreadsheets to track income and expense. Many of them online, easy to find through Google or wherever else you search, okay? That's an Excel sheet that's got income across the top, expense categories down the side and in the middle, equals what's left, okay? So if you have a simple business like I do, I have 4 income sources. That's it, just 4. Got a couple cities, a county, and another, it's called WSBC. So it's another SBDC that got me on contract, okay? I got 4 sources of income. So I have 4 little holes that I put in. I made this with this, this with this, this with this, this with that, okay? Service business. So guess what? I don't have cost of goods. I can't charge cost of goods sold because it's my information I've got in my head that I'm delivering to people. If I bought a pen like this and sold it to you, paid $1 for that, sold it for you for $2, cost of goods is $1. Call inventory, right? And then if I sell it to you for $2, the gross profit is $1. 2 minus 1 is $1. See? So that's cost of goods. Service businesses have no cost of goods. Okay. And again, you can do an Excel sheet, especially if you're a sole prop, single, little easy one, or of course there's QuickBooks and other software. The reason I bring up QuickBooks is simply because it's the most used small business tracking program in America today. So, and you have the most ability for help and assistance on it, QuickBooks, okay? There are a couple others, but again, you've got options. You got to estimate your tax liability ahead of time. You get good at it after the first year or two, right? So say you're going to make 20,000 net after everything's done a year. You know, you got to hide 3-4 grand, right? So about 20%, 25% should be held aside and paid quarterly to prepay your taxes during the year. Reason being, you don't want to get that fine April 15th, the end of the year. You don't pay 75, 80% of your taxes. I can't remember what the number is, but off the top. During the year, you get a slap on the wrist fee. Okay. They want their money at the US government quicker than once a year, say. So again, use separate bank accounts, use and collect tracking, whether it's receipts or otherwise. You do have a lot of online apps that'll help you and assist you in tracking expenses. And obviously don't forget to set up a retirement account. Sole proprietors and people that are in business a lot of times forget about their retirement. Got to do it. Social Security is not going to be enough. Not going to be enough, okay? So hide it as much as you can. And then take care of tax credits as they come along. There's a big one that's coming that was in 20 and 21, big tax if you had employees. So check into the tax credits based on what happened during COVID. Income. Obviously, income is what you make, right? It's pretty simple. Taxable income is what's left after expenses are deducted. So remember, you are not paying tax on what you sell. Okay? Not what you sell or what you bring in. Okay? There's sales tax if you sell a product, but that's separate and that goes to the state. That's different. But US income tax is paid on a taxable net income or net profit after all expenses are deducted. We call it the bottom line. Bottom line. So if you make $100,000 and you have $80,000 in expenses, you're only going to pay tax on 20. The leftover dollar amount, okay? Business expenses, items that are both ordinary and necessary, okay? One that's common to the industry, necessary expense helpful to appropriate for your trade. So for instance, give you an example. A lot of people forget about mileage deduction, especially sole proprietors, right? Mileage deduction. A mileage deduction is an IRS dollar amount that's allowed for each mile you drive for business purposes. Okay? I drive a little each year to go teach classes at various venues. Okay? So I get to charge whenever I travel to an event. Been averaging 56 to 57 cents per mile. You can check the IRS website to find out what the latest amount of deduction is. Okay, changes every year based on gas prices and whatever. So it's going to go up probably this year with all the things happening. So 56 cents a mile you get to write off. It covers your fuel costs, tires, repairs, lube oil filter. Supposed to take care of everything. That is, of course, if you don't have your entire car run through the business or purchased by the business. It's if you're using your personal vehicle. Okay. Now, my wife's in real estate. For her type of business, her mileage each year is her biggest expense. Right? Because she's showing people property, she's going out and having people fix stuff. She's meeting the repair guys. She's meeting potential renters or buyers. She's on the road all the time. She, for her particular style of business in real estate, averages $7,000 to $9,000 in deduction each year for the number of miles she drives. I couldn't get away with that. Say, if I put 9,000 down, just the IRS would say, wait a minute, you're a consultant? How come you're driving so much? You know, especially if I'm a consultant just in Shasta County, it's hard to drive 9,000 miles when you're just teaching a class every other day or every week. So So anyway, based on what you do, based on your business type, there are norms. Prevents you from getting a possibility, a less possibility of being audited, obviously. Why track income? Obviously, to gauge your profitability, financial management, make changes, right? Pivots. Do you need money? Okay, and of course, to pay tax. And as we talked about, how complex is it going to be? If you have employees, if you have 5, 6, 10 employees, you've got multiple pieces of equipment, you have repairs on those equipment, you have depreciation on that equipment, you have a storefront or a retail place or a manufacturing building, you got lights and everything, insurance and whatever, you're probably not going to want to use an Excel sheet. Okay, you're going to probably want to use a bookkeeping program, QuickBooks or otherwise. So it just depends on how sophisticated your business is as to what you can get away with. No matter what, receipts are important, okay? Again, use a separate bank account. You're gonna beat that dead horse until it's gone, right? There you go. Separate bank account for tracking. Tracking and categorizing income and expense. Like in my case, I got it listed as to what city, what county is paying me what, when, since I get paid by those entities. The other thing to remember, if you're dealing with an entity like that, government, you're not going to be paid immediately. So you've got accounts receivable delay. Mine's 30 days. So from the time of billing, end of the month, I probably will not get paid till the end of the following month. So you ought to know that for cash flow, right? Do not get caught not collecting sales tax. If you sell a product, you got to send it in, man. Got to do it. Sales tax, most areas of California currently 7.25%. Some areas are higher with local tax. So check to find out. If you use like PayPal, QuickBooks, Square, some kind of a credit card company processing for most of your sales, it can be automatically built in to that program. They'll collect the sales tax, you put it in a separate place, and then pay it, either weekly, bi-weekly, monthly, depending upon how much you collect in tax. Use software. Again, we talked about the spreadsheet, compiling business use profit and loss categories. We covered that before. Sole props get audited 3 times as much as LC, be consistent. There you go. Okay. So don't have, in Joe Rodola's case, as a consultant that teaches classes for the most part, I'm not writing off $9,000 in mileage. That'll trigger an automatic bing, the red light will go on at the IRS. They're gonna say, we're gonna have to talk to Joe. Okay, we're gonna have to talk to Joe. So if you have a question about what you can write off where and when, again, check with your CPA, bookkeeper, accountant, firm, right? And they'll be able to assist and help you in that area. Cost of goods sold, we talked about, right? Cost of goods sold. What cost of goods sold is the amount you pay normally wholesale to buy your inventory, like this lovely pen, right? And so you buy it and you sell it, okay? So cost of goods is what you buy it for. If you make things or build things, you can charge for the construction of that item as direct labor. Okay, so if you're building that pen, making that pen, you have people working, making them, you can count that. You can count that. Okay, technically, if you make food products to sell, you can count in your time. Okay, count in your time as cost of goods. Okay. Indirect costs, everything else. And most people have these costs: rent, equipment, utilities, phone, mileage, sales cost, advertising, depreciation, taxes, interest on loans that you borrow, business license fees. Okay. If you're in the city areas, remember you have to have one business license. So if your head office or home, if you operate out of your house, is located in the city of Anderson, city of Redding, and the city of Shasta Lake, you should have a business license in the city in which that home or bedroom or office sits. Then you can sell everywhere, okay? Technically, I can sell anywhere I want to. I have my business license in Redding. It's where my house is located. Boom, okay? Then you're operating as a full-fledged business. And again, partially deductible. You have things like food costs. Okay, gifts that you could write off, some entertainment, and of course, depreciation. What is depreciation? Depreciation is normally used on large pieces of equipment. Could be a car, automobile, truck. Could be a backhoe, a dump truck, a water truck, okay? So depreciation is normally there based on the life expectancy of that vehicle or piece of equipment. You get to write off as that piece of equipment gets older. As a banker, I used to call it funny money because depreciation isn't cash. Say, it's an accounting technique to reduce your liability in taxes. So guess what we got to do in the banking industry? We got to add back depreciation. Because you didn't spend that money. It's basically a tax loophole you can use to reduce your IRS debt, but it's not cash. Okay, you're depreciating that piece of equipment. Eventually, that piece of equipment, believe it or not, will end up at zero. Most pieces of equipment, especially large ones, I think die in 10 years according to the accounting rules. Again, always good to have an accountant, CPA involved, bookkeeper, someone who understands the techniques allowed for depreciation. But it's cool because it lowers your amount of money you owe the IRS. The other thing to keep in mind, I'll go ahead and bring it up now. Many times when I was in the banking industry, somebody would come into me at the year end and say, hey, Joe, I had a heck of a year. I sold $1 million worth of stuff, okay? I said, great, okay, great job. How much did you make on that million? And they'd be proudly saying, nothing. I don't want to pay any tax. And then I'd say, well, you want to buy a new piece of equipment for $100,000. If you have nothing left in profits, how are you going to pay me monthly payments? You're saying you don't make anything. And they go, well, you know, I don't want to hear that, right? So beware of making nothing. Let's go ahead and bring it up now. If you're going to be an ongoing business that's going to require eventually some financing, whether to buy a piece of equipment, a building, whatever it might be, you get a loan, whatever it is, don't show zero net, okay? Because you'll have a hard time making anybody believe you can now make a new payment and add it to that debt. It's called debt service. Debt service, okay? It's tempting. Oh yeah, it's so tempting. Get zero on the tax. Oh yeah, because then you don't owe the IRS nothing, right? And if you're a sole proprietor, you have no amount of money to send in for self-employment tax. Whoopee. But if you want to buy a new computer, a new whatever it is, you want to put it on credit, and you don't have something at the end of the year showing left over, hard to say that you can, you know, what you can do there, right? Makes sense. This is the funny part. Our other Joe actually put this in here, non-deductible expenses, bribes, most lobbying costs to your favorite person, penalties and fines if you do things wrong, and political contributions. So there are expenditures that cannot be taken off. And also watch deducting personal expenses off your business. Even as a sole prop, be very careful. Be very careful. For instance, if you by accident take off your car payment interest off your sole proprietorship P&L, profit and loss, and you take 56 cents a mile, that's a double dip. Can't do it. See, you can do one or the other. You can do one or the other. So you got to really be careful when you're posting this stuff to your tax bill, because you don't want to trigger something when it gets back east that says, hey, we're going to audit Joe Rodola. You know, Joe Rodola's debt consultant. Okay? You don't want to trigger that. Questions again, you've got lots of people out there to help. Lots. And this time of year, our Rebecca, who is our QuickBooks trainer specialist, certified QuickBooks trainer, very busy woman, because it's that time of year where 21's being finalized, right? All the financials. And so a lot of people are asking questions. So don't be afraid. Don't be afraid to get on the list. Give us a call, okay? Maximize your gross, minimize your taxable. We talked about that, okay? That's why people want zero at the end. Take advantage of tax credits, okay? See if is there any questions, David, out there that are pressing at the moment that are?
We have one interesting question from Chris. Some LLCs are considered partnership LLCs unless you structure it differently, right? So can you explain a little further the tax differences between an LLC as a partnership versus an S Corp? I can tell you a little bit that the thing to watch out for is the self-employment tax, depending on how you do the LLC. If you're doing a partnership with an LLC, the partners are going to get a Schedule K1, and depending on what, and that's going to tell them at the end of the year how much they made and that sort of thing. And then that may trigger self-employment taxes that you have to count. Not so in an S Corp. An S Corp is going to file an 1120S, and if you have multiple partners and you're not using a pass-through provision of some kind, then you're probably going to pay yourself a reasonable salary on an S Corp, and that's how those taxes would be. But I'll tell you what, an S Corp, at least in California, is going to cost you a lot more to run, because you're required to have shareholder meetings in California. You're required to have a board of directors, and the requirements of an S Corp are just going to have additional costs. So it's a good question to consider with your accountant or a tax expert that might be at your local SBDC. We have a tax expert here named Joe Dorco here in Shasta County, and he can help with your specific situation and let you know. But yeah, generally speaking, if you've got a self-employment tax issue, the S Corp may or may not be better that way. Next question we've got: can we write off office appliances like fan, heaters, humidifiers? Okay.
I would imagine if it was in an office space and used only in that office, that it could be considered an expense.
Yeah, absolutely.
Yeah, checking with your accountant, CPA, obviously, because we're not one, but that does make logical sense.
Yeah, it does. I mean, you know, remember the coal in Christmas Carol? You know, you put the coal in there. Scrooge could write that stuff off. You know.
True.
That's why you didn't want Marley using the duck. Okay, all right.
There you go. Okay, cool. And again, this last item again, people, don't forget, and this happened to us personally, is not hiding enough money for retirement. When you are self-employed, you tend to forget that each and every month as you're making this money, if you spend it all, wow, right? And the cool part about setting up a tax deferred, I don't know, there's different types of situations. There's SEPs, there's this, there's that. Again, always good to have somebody in the financial area help you with this thing. But if you can defer that tax by putting money aside and not having, you know, and hiding it so that you can pay it when you're not making a bunch of money later, dude, that's the way to go, right? So don't forget to set up your retirement program for you personally as a business owner, okay? And state of California's got a neat program where you can actually set up retirement programs that's run by the state, okay, for you and your employees, and they can dump money into those things, and it works great. So that was a thing that was started just a few years back. So you can do that. Of course, you can hire somebody to do it, you know, professionally too. But state of California's got a neat program. So as a summary, track your expenses, make a decision on which is going to be best for you. Software, phone apps, right? My wife, prime example with the mileage. There are mileage apps now, okay? Good old cell phones. It's amazing if you think about it, guys. This cell phone that we have and carry around in our wallet purse, I have a little OtterBox I carry on my, you know, my holster. That's got more power than the first Apple computer that came out. Isn't that crazy or what? You know, and we thought those little Apple computers when they first came out were unbelievable. I remember playing Pong back in the day. I thought, this is great. You know, these have more power than that son of a gun does. And you can have mileage tracking is the one I'm talking about, for instance. You can mileage track using an app. It'll track it legally for you. You can print it out, have it at the end of the year, show how much you drove. My wife still uses a little fold-out calendar in her side pocket of her car, right, with a pen in it. So every day of the week, when she gets into the car in the morning to leave, she writes down yesterday's B mileage tracker on the B tracking on the car, right? And it clears it, so she could then count up the next day. That's worked for 25 years, right? Before these apps were even invented. She just kept using it. You got to track it though. Got to track it. You can't just say, yeah, I drove 5,000 miles. You're gonna have to have, okay, how many a day, right? And hers fluctuates. She's driving down to Cottonwood from here, or she's driving across Redding to Churn Creek. Yeah, big difference in mileage, right? So you got to track that stuff. There are apps on here where you can take a picture of your receipt. Boom, throws it right in the category of your tracking program. Wow, huh? Then you don't have to do it later. It says run profit and loss at least quarterly. I should have probably changed that when I saw it. I firmly believe you got to do it monthly, minimum. Okay. And I say every 2 weeks, especially in a volatile market like we're in today. If people hadn't done that quickly to find out how much, you know, they figured people weren't coming in to buy whatever it was you were offering, but how much am I losing? You need to know that, right? When they shut down the state of California, you need to know immediately how much per day are you not making, because you've got no clients, right? If you were a hairdresser, a nail person, mowing lawns, whatever it was you were doing, you weren't doing it. All of a sudden your income went, boy, you needed to know how much you need to be able to, you know, buy milk. I mean, it was really that important. So I say every 2 weeks minimum, okay? And monthly for sure. Know where you're at. Pay your taxes quarterly, okay? If you know you're gonna owe taxes at year end, don't get that stupid fine. It's one of those nuisances, right? Sit down with your specialist, your tax specialist, your accountant, CPA, whatever it is, and several times a year, okay? Do it. Keep in touch with them. And remember, making money is easy, keeping it is the challenge. That's the key. That is the key. Okay. Estimate tax liability, pay quarterly, pay your employer portion of payroll tax on time. That'll be remindful, even if you use QuickBooks, it'll tell you that. And pay all sales tax. Don't forget that. Send it to the state of California. Everybody will find you if it doesn't go into the right spot at the right time. And all of these now are being done online. You don't write checks anymore. Back when I first learned QuickBooks in 1998, okay, I was using it for my small company. I was running the little CCCS office, the nonprofit. We had to send checks. Cool thing about QuickBooks even then was we had a little computer, right? And it reminded me to send it. Oh, today's the day you send in the check, you know, and it had a little printout form that I could print. Sales tax for, boom, whatever it was, boom, send it off. Okay. So it was cool. Now you electronically transfer it. Just goes zip and it's gone. Okay. Use tax deferment options again, 401, 403B. LLC corporation members may be able to categorize net income. Again, very different if you have LLC and a corporation, very different than sole proprietorship. Take advantage of employment tax credits, especially now during this last period. We had some people get some tax assistance refunds in the hundreds of thousands of dollars. Now, these people had 30 to 50 employees they were working with, right? The tax credit is meaningful. It was part of CARES Act and the new one that Biden did about last year sometime. March or April of 21. Take advantage, find out what the tax credit is, how it works, how to get it, because it can be meaningful bucks for you and your business. Business expansion, manage profitability, manage finances, watch cash flow. That can be, as we talked about, as big of a problem as a downturn. Keeping up. We had a client that had an issue with very quick increase in sales. They picked up more stores that wanted their product, like 20 new stores. And they had to come up with X amount of product in, a week or two. And it was him and his wife. You're working 24 hours a day. So we got him hooked up with our Smart Center here to get some help and assistance. Don't forget Smart Center for trying to help you find some qualified employees. And some of the Smart Centers, most of them have programs, depending on the job type, that will offer 30, 60, 90 days worth of training salary paid for you on your behalf to your new employee during training. So that's what he got. He got an employee to help him with packaging, labeling, try to assembly line process the thing so they weren't working 24 hours a day to get this product out to the stores. Pallets worth of product to the stores. And it was handmade product, handmade. So you can tell all of a sudden this growth went, Joe, I'm dying. So we had to get him somebody in there like right now. So just remember that expansion can be as crazy as a downturn, no doubt about it. Any questions before we wrap it up? See if there's anything left over.
Yeah, we do. Here's the first. We've had 3 or 4 come in. Can I get a 401k if the business is not yet profitable? I'm assuming it's a sole proprietor, and the bottom line is yes, you can. And just check with, in fact, as a sole proprietor, you may be able to contribute more to your 401k than if you were just had a traditional one with employees. But check with place where you set it up, like, I don't know, Fidelity or whoever, whatever financial institution you're going to set it up with. Next question, I'm establishing a permanent cosmetic business and considering an LLC business structure in Tennessee. Love Tennessee. Half my relatives are in Tennessee. If you know anybody in Tennessee named Walker, I guarantee you I'm probably related to him. Anyway, can I hire myself as an employee? I have a full-time job in which to keep it until I make a sustainable profit from my LLC? And answer to that is yes, you can hire yourself as an employee. Depending on your situation, if you're going to have an LLC as a pass-through, you might want to check with your CPA or accountant to see if it makes sense to just pass it through onto your Schedule C, your personal 1040 form, as opposed to paying yourself as an employee. But if you want to, yes, you can hire yourself as an employee. I should be. I don't know if I should be answering these for you, Joe. But
no, thank
anyway,
you. It's very, very great.
How do I track if I do personal and business trips in one travel? Generally speaking, your mileage is going to be from your office to the location and back, and you'll that's what you'll put those miles on the form. And our marketing expenses are deductible. Our marketing expenses are deductible, Joe? Of course they are.
Betcha. You
Yes,
betcha.
sir.
Yeah, marketing, even if you use Facebook ads, if you're just using Facebook to sell product or service. My daughter's got a little art business that she does and uses Facebook exclusively to sign up her clients. And she'll do that every so often. She'll buy some ads through Facebook. I said, don't forget to write that off. That's advertising expense. See? That's marketing. So yeah, any of the flyers, making flyers, putting flyers out so people know what you're offering. Websites, and the deduction for the, you're going to get charged for your domain name. Yeah.
What's the difference between deductibles and credits? Credits are cash refund. You want that, or you want me to do it?
Why don't you do it? I'm not quite sure what
All
the
right.
question.
Deductibles are generally things that are coming right off your income, your expenses. For instance, when we're talking, the way we're talking about deductibles, when you're talking about your Schedule C, the things that you're going to deduct right off of your taxes. Credits are additional incentives from the government that you may or may not qualify for, that will lower the actual amount of taxes you have to pay. They would become a cash refund, generally speaking, if you've already paid the tax and the IRS owes you money because of the credit. That's when they would turn into a cash refund.
Yeah, this latest one that we were talking about is, depending on how many employees you have, could be very meaningful.
Yeah.
The
reason that turned into a cash refund in that particular case was because they claimed the credit after they had already filed the tax forms, the specific tax forms.
It's sort of like a refund.
Yeah. So I put in a survey here, Survey Monkey survey there, a link.
I always like the name of that. It's kind of funny.
Anyway, yeah, so please let us know how we did and how we can improve, and any ideas you might have for future webinars. This is how we improve. This is how we figure out what it is people want, what it is people need to know. And I'll give you a reminder that you will be getting a copy of the recording. Good question, Mel. Perfect timing.
Boy, you're perfect, Mel.
Yeah, we're gonna send you a link to the recording, and we're gonna send you copies of the slides here.
Exactly. Don't have to memorize it. We're going to send it to you. And here's our contact information, of course, about our local Shasta-Cascade SBDC office. Emily, our admin, is our right arm, left arm, and everything else, and she can help you out at 222-8323, area code 530. And remember, there's an SBDC office everywhere, even in Tennessee, right, David? So we have SBDCs all over the country to help. And we also have Facebook. We even have Twitter. How about that? And these are our links to our LinkedIn, Facebook, Twitter, and our YouTube channel. Because all of these the last 2 years, our webinars have all been online. We used to teach classes in person. Now they've gone to online webinars through Zoom. And we got a ton on there taped. So if you want to start a business, whatever, it's all on there. Marketing, using Excel spreadsheets, you name it, we got it. Okay. And again, thank you for joining us today. And thank you for thanking us there. Tamara and Mel, thank you. Great to have you aboard. And if there's any other last questions, we're just about out of time, I guess, huh?
I don't see
All
any
righty.
more. So yeah, we'll wrap it up. And if you, like Joe says, if you do have questions, check out your local SBDC or contact us. We're not going to tell you to go pound sand or anything. We'll do what we can.
That's one of the amazing things about our webinars is we're getting people from all over the country and sometimes all over the world watching our webinars. It's kind of crazy. Thanks, Chris. Thanks, Erica. Appreciate you joining us. Have a great day, and we'll see you down the road on the next one.